Welcome to Short View Trading. This is your morning market hit for Monday, 4th of September. My name's Chris Watling. I'm the CEO and Chief Market Strategist of Longview Economics and Short View Trading. And now I wanted to talk to you in this video about how to trade markets on a 1 to 2 week basis. If you're a swing trader of equity markets, equity index futures in particular, whether S&P 500 equity futures or DAX or NASDAQ or FTSE futures, what should you be looking at? What should you be doing to go about trading those markets either long or short on that 1 to 2 week time frame? That's what we're going to get into in this video. So the big question for traders now is that markets have been rallying for a couple of weeks. We put in a low on the 18th of August, having sold off for the prior 2, 3, 4 weeks in global equity markets. And since that low on the 18th, they've been bouncing, as you can see in the chart that we're putting up in front of you now, of the global equity market. And that leaves us the question of, should you just jump on the momentum? Has the upside trend resumed, or are we in the midst of a classic sell-off? Because classic sell-offs tend to happen in 3 waves. And as you can see from this chart that we're throwing up in front of you now, back in September 2020, there was a classic 3-wave pullback. This is a great example of what we're talking about. An initial wave of selling that takes the market by surprise, with equities pulling back for a couple of weeks. Then what we call a wave 2 relief rally, a retracing of a lot of the losses of the wave 1, perhaps 2/3 of the losses, bouncing up about 2/3 of the losses of the wave 1. And then the wave 3 commences and you roll over down to new lows and make lower lows than you saw at the bottom of wave 1. That is the classic 3-wave pattern in a pullback. And the way to trade this is to look at fear and greed models. Fear and greed models are pretty good at giving you insights about when to swing from long to short and short to long and so on. And in fact, if you look at the technical scoring system we're putting up now, you can see it was pretty punchy on the sell side at the end of July as you got into August, and then the model came off and went back towards buy, perhaps a little bit early, but certainly by mid-August was giving you that nice buy signal just ahead of the wave 2 relief rally, and now it's back on sell. Equally, if you look at our risk appetite scoring system, this is a bit of a model of fear and greed. It's a similar sort of pattern in the last few weeks. So these kind of short-term 1 to 2 week models are quite helpful for giving you insights into how to trade these markets when they're in 3-wave pullbacks, classic pullbacks that you get in bull markets. And then on top of that, you want to add in some price action. What's going on in terms of key assets across the globe, key other assets outside the equity market that might give you some insights into the risk on or risk off regime that may or may not be percolating in the background. So for example, the dollar often has a very strong correlation with the equity market. So when the dollar's weak, it's often a risk on environment and the S&P 500's rising. And then when you've got dollar strength, it's often telling you that the equity market's going to come into a bit of a speed bump, bit of a road bump, bit of a pullback on the horizon, and there's some risks out there and you need to start thinking about the short side. And interestingly, if you look at the dollar now, on Friday the dollar was actually pretty strong, consistent with the idea that maybe we're brewing for a wave 3 down wave here, maybe we're brewing for some risk off as that dollar strengthens. So these kind of things are interesting. We look at things like Bitcoin as well. Bitcoin's a very big speculative asset. It's at the edge of liquidity. It's the edge of speculation, if you like, and it often moves ahead or in conjunction with what's happening with risk assets like the S&P 500. So Bitcoin was interesting because a few days ago it popped up on the back of that news flow about grayscale and ETFs and so on, and then it's given back all of those gains. It couldn't sustain any rally, and then now it's pressuring on its support level, looking like it might be about to break, which of course, if it does, is consistent with the idea you're slipping into a wave 3 as well. So on top of models, we like to think about the way the global financial market puzzle adds up and what all other prices are up to, what the dollar, Bitcoin, ton of other stuff is up to, and is it confirming or denying the message that we're getting from the 1 to 2 week market timing models. But if you want to hear more from us, you want to keep up to date with our thoughts each and every day, and you're interested in seeing the models updated each and every day, and an explicit recommendation on whether to go long or short equity index futures, typically on the S&P 500, but also elsewhere on the NASDAQ, FTSE, DAX and other equity futures that we make recommendations on. If you're interested in all that information every morning in your inbox by 9 a.m. London time, then please do subscribe to the Rag Trader or take a free trial if you want to give it a go for a while. We'll send you the rag for free for 30 trading sessions. Just click on the link below in the YouTube description and you'll go straight to the website where you can sign up with your name and email address, no credit card details required, and we'll send you the rag for free for 30 trading sessions. So what are we watching today and this week? Well, it's Labor Day today, so the US markets are closed, so volume's likely to be light. This is likely to be a quiet Monday, not too significant. But beyond that, as we get into the rest of the week, we'll be watching price action closely. US 2-year bond yields, fascinatingly, are struggling to stay above 5%. They've pulled back again for the third time, having failed at around that level. I think that's critical. Interestingly, a lot of the Magnificent Seven, the big mega cap tech stocks that we talked about in the video last week, are trying to break through their 50-day moving averages, and many of them struggling. Tesla did poorly on Friday. Apple looks like it's trying to push above. All of that, I think, is critical in terms of whether sector leadership's changing or not, and whether or not we're going to get that wave 3 pullback. On top of that, China's fascinating. A lot of policy announced over the last few days. Stocks popping on overnight Monday into the Monday session, the Monday Asian session. Everything in China's fascinating in terms of the global macro and the policy we may or may not get out of there, and the price action in their asset prices as well. And then on top of that, of course, there's lots of macro around, lots of bits and pieces. ISM services coming out this week, lots of other bits and pieces of macro data that will be focused on and flagging up each and every day in the Daily Rag. So that's it from us. That's your morning market hit for Monday, 4th of September. Thank you for listening. Please do subscribe to these videos on YouTube. Click on the like button, click on the subscribe button, follow the videos and subscribe to the channel, and follow us on Facebook, Twitter and or LinkedIn. Thank you for listening. Stay safe. Trade well.